Hello and welcome to today's stream. Sorry for that delayed intro. But today we'll be looking at Match Group and uh, Grindr's uh, investor relations investor relations pages. And we'll start with Match Group just because Match Group is the bigger dog in the space. Uh, uh, Here we are. Of course, these are both, of course, functionally dating apps. Of course, you can assume that there's some degree of like data advertising, although uh, it doesn't seem like they're advertising. Or their advertising is in contrast to other platforms where advertising, like if you go on TikTok, advertising is enterprise to consumers, right? Business to consumers, whereas like the quote unquote advertising when it comes to a dating app is functionally consumer to consumer, right? Because the dating app has like different boost functions or let's increase your visibility, uh, which is functionally advertising, right? Because the content or the feed, right? You're distributing yourself onto the feed for payment to the platform. So of course, that's just an interesting aside. And just a structural difference is consumer to consumer versus business to business. And you probably think, does that change like your beta or your exposure to the overall market? It's probably a bit immaterial in terms of that difference, right? Because either way, advertising dollars are one of the easier things for a business to cut off. The same way, paying for more Tinder exposure or Hinge exposure is probably a bit more uh, variable as well, right? So not sure if there's too much of a judgment. Although I'm pretty sure, like, I guess probably and it goes both ways, right? You can think of whatever counterfactual for which one is more sensitive to macro conditions. Uh, Revenue decline, not the most interested in this. Of course, Tinder is the big dog, right? Tinder is well over half, like so what, 60%, followed by that's probably something that it's just interesting, right? So of course Tinder, right, is the big dog, but Evergreen, uh, next biggest, followed by Hinge in the most recent quarter at the least. Uh, so yeah, year over year flat for Tinder, decline in Asia, or excuse me, decline in Evergreen, emerging market. Uh, so that's interesting. This way, of course, it would be. I'm not sure if there's statistics on how much of like say a Tinder user uses Hinge or whatnot, to the degree of which there's uh, overlap between the different platforms and pairs, of course, decline in pairs, right? And so probably right. Say there's some macro exposure from this, and then revenue per pair instead of like ARPU, which is average revenue per user. Revenue per pair is more so focused on whereas ARPU is ARPU includes the people who pay nothing, right? Because you can still monetize them in some cases through advertising, right? Like if you're a Facebook user, you pay nothing most likely, but of course Facebook or Meta does have an ARPU value assigned to you from the ads that you get. Of course, for what reason we just talked about, with this advertising being a consumer to consumer aspect of Match Group, uh, and as subsidiary entities, it's not the most relevant. And so, this way, revenue per paying user, revenue per payer breaks down. And so it's good to see that in the first quarter, I'm assuming it's quarterly, it's not annualized. Uh, yeah, only in the first quarter. So I don't think it's annualized. So just annualize it. Uh, Analyze this, so it's people pay $60 a year. Which I mean, but again, right? Like, of course, the big overhang when it comes to like these dating services is that like, part of it is just a demographic thing. Part of it is just a macroeconomic thing, and then of course there's also then, like think about that consumer flywheel, right? Like if somebody's using Instagram or TikTok, they'll probably stay on Instagram or TikTok for a long time. Whereas of course, because the value add of the platform is to provide you engaging content, whereas the value add of a dating app, presumably, or at least some people, is to ultimately not need a dating app, right? So there is always that interesting contradiction is a bit of a strong word, but I mean, that's what it is, right? Right, like a subscription does not have infinite, a subscription does not have infinite value uh, for a dating service, right? A subscription does have an end date at some point. Tinder, I remember reading that there's been some issues of Tinder, so they're having to do some revamping to get Tinder back on track, right? Maybe enhance the brand a bit, make it not as make more of a relationshipy than the transactional stuff. Just for you, I mean, I don't use Tinder personally, so I don't, and I don't use Grindr also, so it's a bit talking out of my ass, so to speak. Uh, Pricing, tiered pricing, usage. That's interesting. So like about half of people in the NA or Europe have used Tinder. Uh, Interesting. And then of course, yeah, much lower. But of course, then right, like APAC, rest of the world, probably a bit more like that evergreen service. Europe momentum hinge, right? Diversifying the portfolio. Pretty sure that's Bumble's logo. And of course, Bumble being another pure play dating service, always interesting to keep marks on the competitors. Hinge, intention daters, Tinder, broad audience. That's a nice way to put it. Broad audience. To a range of relationship possibilities. That's a very kudos to the IR team for that one. Uh, Use 3 to 4 dating apps at any time. Hinge doesn't cannibalize. It's interesting. Well, and of course, right, the company's kind of making it whatever sounds best for them, but you know, of course, there's a lot of a third party stuff. Hinge launched Hinge Plus. 20% of the users start subscribing. I mean, the pricing on this is pretty expensive, right? You look at revenue per pair, like 25. I mean, like that's a pretty hefty subscription, and you analyze that, right, by quarters, so $100. It's not insignificant, especially if you're a consumer, right? Like you compare this revenue per pair, and you compare it to like the ARPU on from Facebook, right? Like it's a order of magnitudes greater, right? Of course, it's a smaller number of people, but just in terms of so of course like your absolute dollar value is different, but in terms of like user to user, right? And of course that's what you'd expect, right? But it's interesting just to like think about the different ways to monetize users. Match Group Asia. Okay, so Evergreen is just that's not a brand. It's actually just internal financial outlook. And of course, fund balance sheet stuff. Any COGS increasing, SG&A going down. Yeah, okay, fair enough, fair enough. Liquidity. I think till 2026, and I'm pretty sure, I'm reasonably confident, Match Group can finance those, or not refinance, but pay it down, or definitely it's immediate 2026 maturity. So yeah, I mean, this is definitely a sort of stream. I have to get a haircut, and it is Juneteenth, right? And so it's back to the old 9 to 5. But I mean, that's Match Group, right? So definitely, I mean, if you're a user of the platform, interesting or one of the platforms that Match Group owns. Uh, I mean, interesting to see different breakdowns and necessarily where you fit into the value stack, and also, I mean, you can compare how much you think you spend to how much other people spend. Uh, and of course, right at the end of the day, right, it's a reminder that these are it is a business, right? It's certainly a publicly traded one. Uh, and again, to that contradiction point, and also, I mean, again, if you're a user, right, and I mean, if I mean, Tinder or Match Group is talking about different changes to make the service, presumably because it's going to make the service better, or at least monetize better, out of which will make and impact your user experience. Then maybe you can get the edge, by reading by reading the investor presentations, right? So all about the small things. So here's some of the brands. On to Grindr. Of course, a much smaller company. I'm pretty sure Grindr, because it went public in November last year. I was trying to find information on because it came through public through a direct listing through it, or not through a SPAC transaction, not not a direct listing per se. And so there is a share lockup of some degrees. I'm trying to figure out if there's any more or if they've all passed, because it has been since November, like half a year, roughly since the company went public. So I get the feeling that I heard secondhand that there's like a share lockup ending of 1 year after, uh, and that would be in November. But I'm digging around some SEC filings. I couldn't find it, so still need to do some more digging. Uh, but it's just a reminder, right, of how SPACs work, and at the end of the day, right, like people sell for a lot of reasons, uh, but they only buy for one. Again, right, you can see the difference in the scale, right? Like 500 or 55 million in revenue, 55 million in, yeah, just revenue, just top line, 787, right? So, so just in terms of magnitude, of course, very different. Right? Average paying users 866. They give us any data on number of payers, 15.9 million, 866. Again, Grindr, it's a $1 billion company. Match Group is a 11 equity value. Plus an enterprise value, it's plus probably 15, 16, right? So I mean, it's again, these you can't do apples to apples on these ratios, but it's just again a reminder of the difference in scale, uh, monetization, user experience, HIV home test. I mean, just as as someone who's not a user, right? It's interesting to see how the differences. And also, I'm not sure if Match Group has any like LGBT focused, because you think of that app portfolio, it might be something, but never know. Negative net income, positive EBITDA. Doesn't say adjusted, so do some digging. Average revenue per paying user, again to that ARPU versus RPP, up 25%. Over 25%. It's a 60, mid 60 million quarterly or full year. So if it's too very simple, 55 times 4 gets us 220. So if I were talking 240 in revenue, something like that, I mean, 4 times sales. I mean, we'll see how November goes. I'm pretty sure there's a share lockup that expires, so that probably a lot of selling pressure. I mean, but again, right? Like it's kind of like the tough part is like having a thesis and like being confident that the thesis is going to work out. Uh, but I think that when it comes to like a name like Grindr, when there is a pretty clear comparison, you have Bumble and you have Match Group, and of course Bumble is a much better comparison, and we're not looking at uh at, at Bumble today. But it's kind of like like a playbook's a playbook, right? I'm trying to think of a good example. It's like if like you have a company that's following the similar strategy to like another company that's been successful and proven the model. It's just kind of like investors can underwrite that expected probability of success or like know what you're trying to do. Um, of course, the issue is right. Grinder, its comparison is Match or is Bumble, right? Being like a pretty limited scale. I mean, Bumble has a couple brands in its portfolio. Of course, more focused internationally, uh, but geographically. But again, none of them have the scale of the Match Group, right? That's in terms uh, of financial ability, or of course, just having that flagship, omnipresent kingpin of Tinder, right? So, I mean that's Grindr, right? I mean, you're trading at 4 times sales now. Probably is going to get hit a bit or dinged a bit in November when I'm pretty sure insiders there's a sure lockup ends. But again, right, only 6.7% of users. Again, it's pretty easy to back out. Total users. Or they give it to you right here. Again, right, to the degree to which $18. Okay, so $18.52, $16.26, or 16.94. So Grindr monetizes better, or maybe not monetize better, because I'm pretty sure I'm guessing like the percentage of users uh, isn't the same. But in terms of just dollar value, right? Grindr monetizes for a higher dollar value, which is an interesting takeaway. There we go. There we go. That's the one thing you learned from today's video. That's actually kind of not unique, but like actually had to like read these materials. Is that Grindr has a higher average revenue or revenue per paying user than Match Group. And of course, that's what we expected, right? Like Match Group is including all of its international things, right? And so you have like localized pricing. So of course, when it's convert all back to dollars, right? It's gonna have an effect. But so anyway, right, 18 to 1690, right? Like relatively close enough that you can say, well, Grindr, a much smaller platform, certainly in total addressable market, right, where it's basically just LGBT is its is its TAM, whereas the Match Group is presumably everybody. Because again, I'm pretty sure I mean LGBT stuff is an option on those platforms as well. So it's interesting to see how Grindr has monetized that rate. So that's pretty interesting. So anyways, thank you for watching. Again, maybe next time you go on one of these apps, you have a bit more context. Maybe if you buy a rose on Hinge, um, or again, I'm not quite sure. I guess Grindr, it's some type of subscription. I'm guessing, like, because you like again more visibility. Uh, so that's that. On a side note, I'm pretty Hinge is a very funny app. Again, I'm not sure if there's any downside per se to having a Hinge or one of these dating apps. But yeah, I don't know. It's amusing observations you can make. But let's say again, right? And then, right, you can just say if anybody asks you, just doing due diligence on a public security, and you can walk away with your head held high. So anyways, that was a quick look at Grindr and the Match Group, two very different companies, of course, in the same ecosystem or space, but again, operationally very different, size-wise very different. So that's again right, and I kind of idea I talked about it previously on the Live Nation versus Vivid Seats, right? Is even if you're not interested in a competitor, just knowing more about the competitor will help you understand more about the main business that you prefer or why you like that business in the first place, right? And so, always got to be intellectually honest and curious. But anyways, thank you for watching. It has been a while since the last stream. Definitely will, of course, try to keep definitely a minimum once a month, but of course, hopefully, be a bit more ambitious. But you know, moderate expectations. But thank you for watching, and hey, let me know your thoughts in the comments, and hey, have a good day.